Yellow. How are you? Can you hear me? Hello. Can you hear me? Uh, uh, uh.
Oh,
Hello.
now. Hello.
How's it?
How are you? I'm good. I'm good. Today I'm not sleepy. So yeah, I'm good.
Yeah, that's nice. So, I just wanted us to take a look at these synthetic indices. Maybe these other booms whatsoever.
Mhm.
Yeah. So I wanted us to analyze them together so that you can
Okay.
see some of the. So which pairs did you say you trade once again?
Crash 500 and boom 1000 most of the times. If I see opportunities on boom 500, then yeah.
And you see
But
crash,
not all the time.
crash 1000
Crash
like
500.
all right.
Um, Crash 1000. Yes, here and there if there's a normal downtrend. Like Crash 1000, Crash 500, Crash 1000 and B500. Those are just for here and there. And
So
then for the main ones, Crash 500 and Boom 1000.
or you only trade spice.
The trend, yeah. If it's going up, most of the times I'm just like, and if Boom 1000 is going down, I just leave it like that. I don't enter, but I always see that I lose money because of that.
Okay. Okay, it's fine. So we'll start with crash 500, then boom 1000.
Mm-hmm.
Then this other guy is saying we must also analyze crash 300 and boom 300. These are new.
Okay.
Those ones are new, right?
Yes, the new ones. Yes.
Okay. So basically, if you check crash 500, I'll just start from the daily. If you check overall, we have been in a major downtrend. So one can actually plot the major trend lines just in advance. So that one you can just do it in advance. But me, I can work without even having the major trend lines like that. But someone can just put them just to have them in advance. Let me do this. So you can just have the major trend lines in advance. You can just place them on your chart. Once you have, okay, so the first major one is that one of which the market for it to reach there, I think it will take months for it to reach there. If not,
Mm-hmm.
one can actually draw this just to have them on your chart. You can draw them, or you can also choose not to draw them because they are not the market for it to go there. It will take a long time, of which as we actually want to make money now, not the next month or the next 6 months. You understand?
Yeah, yeah. True.
But the most important thing about these major trend lines, they can actually show you, let's say this market, if you check it, it has been in an overall downtrend. So basically, if you check here, the market hasn't touched this trend line here for the third time. First time here, second time there. So basically, the third time, the chances for this market to come for the third touch there before it starts to go up, they are high. The chances for the market coming down to make a third touch there, then going up is high. So once you have identified those major ones, especially the one at the bottom is very important because the market can reach there in very few days. It will take few days for the market to just come and touch it. That's why that one is very important, unlike the one that is at the top. So at the top, we can also have something like this, whereby we have that touch there. We can also have something like this. One can also have something like this. So if you check there, it's actually sort of like a triangle that is descending. sort of like a triangle connect when we look at the bottom and the top trend line, sort of like moving in that triangle kind of way. So if you check right now where the market is currently, one can actually see that price is rejecting based on this trend line that is at the top. Price is failing to go up based on that trend line that is at the top. First touch, second touch there, obviously another touch there. So had price broken that trend line, that's where maybe possibly we're going to start buying. But as for now, we are still, the momentum is still to the downside, right? So after having drawn that, you have a trend line there, obviously, that is actually showing you that we are downtrending. So if you check the overall market movement has been a downtrend. If you check, so a downtrend, we obviously know that it forms lower highs and lower lows. So basically, I'm going to mark my lower highs, since those are the points that I look at for my entry, for my sell entries, right? So basically, that was also another opportunity to sell. This here was also another opportunity to sell. Then here as well, that is a lower high level. This is a lower high level because that was a lower high, made a lower low. Then that level, that whole entire region, it's a lower high. So I'll just mark it like that. Since it's a very significant level, once the market manages to break that lower high, definitely we are most probably going to the upside. So basically our sales, when we take them on that lower high, they are much more safer than anywhere else on the market. So currently right now we are having a number of confirmations. The overall trend is downtrending. We also have a trend line there that is at the top. We also have a level of resistance that the market is failing to break. So let's go to 4 hours and see if there's anything that we can also take advantage of. So on 4 hours, you can actually see that it is actually given us a very beautiful, right. So, okay. So on 4 hours, if you check prices, actually giving us a bearish rejection there. That is actually a sort of like a hammer. If you check that tail, it's actually a rejection to the downside. One can actually call that what do you call this, a shooting star, since at the top there, one can call it a shooting star, whichever way you decide to call it. But the most important thing is to identify that rejection that is there to the downside. So we actually got a rejection there. So basically, if ever I was trading Crash 500, I was actually supposed to have seen, obviously I was going to see that this thing, so there, definitely after that rejection, basically, personally, I was going to have entered maybe based on the lower time frames. Let me go to, okay, let me move this. Okay, so if ever you missed the entry at the top there based on smaller time frame, if ever you missed this entry here at the top there, the next thing that you can look at is the current trend that is here, this one, this other trend. So that trend can help you to actually identify another opportunity that we can get for our entries on the Crash 500. So that one will help you in case you missed the top what? The top entry. Right. So right now we are still in an overall downtrend, as you'll see. But if you check, this was a mini uptrend that was happening. From that level, it was a mini uptrend happening. So if ever we look closely, you realize that if ever the market comes and breaks there, definitely, and retests there, definitely you can hold sales all the way to that bottom trend line, right? So another entry would be at the retest there, or simply even immediately after the breakout, one can even enter based on the smaller time frame entry that you would have taken. So that is also another safe entry that one can actually take. So if ever, for example, For someone with, let's say, a bigger account, for example, the other people with bigger accounts whereby you can actually even enter the sale right now, but their stop loss is very, it will be too much for someone with a small account, because his stop loss is there at the top of that trend line of that recent trend line. That is for someone with a big account. A big account, I'm speaking of something like $1,000 going up. So long as below that, it's a small account. You understand?
I understand.
So having seen what we saw on the daily and what we are currently seeing on the 4 hour, we can even scale down to a 1 hour time frame if ever there's something that we also need to see from there that can even help us maybe to get an earlier entry than to wait for the market to come and break that bottom trend line there. So we're on 1 hour right now. On 1 hour, if you can check on 1 hour, on 1 hour, they were like that entry at the top. That was the best first initial entry that one was supposed to enter, because price touched there, second touch there, third touch there. So that was actually third touch, and also the overall trend actually also touched it. So basically that sell that happened there, one was actually supposed to even take sniper entries. That's where one can even take sniper entries even based on smallest time frames. Those are entries whereby even if you go down to a 1 minute time frame, you have your trend line, you still have your trend line. But if ever you go to 1 minute and 5 minutes, let's say you want a sniper entry, obviously, you know, for my sniper entries, my stop losses are very tight, just in case the market doesn't go my way, right?
Yes.
So that third touch there, one could have gone to smaller time frames, smallest time frames, even 5 minutes or even 1 minute. One could have gone there, and you could have gotten this rejection that you are seeing here on 1 hour time frame, like whereby price rejected and closed to there. Those are actually candles. If you go to 1 minute and 5 minutes, you actually realize that those are candles that were going down.
Yes.
Let me just mark that area there and see on 1 minute what was happening. Right. So on 1 minute, the area that we marked there, because I know most people, I don't know why you like 1 minute, but it's fine. It's fine. So on 1 minute, our third touch was it was somewhere around there. Somewhere around there. Let me see if I can identify. The problem with 1 minute, you can't even draw a proper trend line sometimes. I don't know how people they draw trend lines on 1 minute, especially on this pressure.
I don't think it's possible.
It's not even
it's not even a thing. It's 1 minute is not even for, I don't know what it is for.
So it's
you can't do anything proper.
Maybe like this. Right. Maybe like this, right? I'm just giving reference to that other trend line that we already have on 1 hour, right? So on 1 minute, maybe someone could have done the thing like this.
Sorry about that. I got a call.
Okay, so I'm simply saying, if ever one wanted maybe a very earlier entry, you could have used 1 minute or 5 minutes, even 15 minutes is also okay. Let's say you wanted the earliest entries, right? But earliest entries, what you need to know about them is if ever the market opposes you, obviously it's going, you need to have a very tight stop loss so that if it opposes you, you don't lose so much money, right? So there on 1 minute, you could have ended either there, immediately there at the top there, because that would be a third touch according to your 1 minute. First touch there, second touch there. So definitely there on those candles there, one could have actually sold there. So selling there, you are also watching your trend line. Say if this market breaks my trend line, definitely I'm looking to what? To maybe close my trade and wait for the price to break inside my trend line. That is if ever that market broke outside of that trend line, right? So if ever one had entered that based on that, it was also fine. But actually, personally, I prefer 15 minutes. Even though 1 minute is fine. Even though 1 minute is okay, but personally, I prefer 15 minutes. Right? So 1 minute is not a problem, it's fine, but personally I prefer 15 minutes. So the reason why I say I always ask, like I'm always shocked by especially these Zimbabwean traders, whereby you claim to catch spikes, but because what most people do, for example, on 1 minute, you realize that after 1 or 2 or 3 spikes, they come out. I don't know if you've realized that.
Yes, usually, most of the times.
Yes, so doing that on its own, like most of those people, they might not be having the overall picture of the market, of where the market is going or where it might be. They might have that whichever strategy they might be using to identify, because some other people, they use, I've met people who use, what do you call this, moving averages. Let me see if I can place any moving averages so that I show you how they. So the other people who use moving averages, right? Only. So what they do, 1 minute. 1 minute like that. Yeah, exactly. On 1 minute like that, what they do, so long they are moving averages cross, that's when they jump in. That's when they jump in. Like, have you not seen that before?
I don't know, because usually most of the times I don't take people's signals.
Somewhere here.
They're tricky.
So if you check somewhere there, the moving averages, they crossed there. So there are people who simply just look at their moving averages. That's their only, like if they crossed there, right there, they could have bought. Then there at the top they crossed, there they could have sold. Such trading, at one point it will catch up with you. Why? Because moving average, what they do, they lag, like they don't tell the market where to go. They follow what the market is saying.
Okay. True.
So you realize that at a point like this, whereby let's say they bought after the moving average is crossed, then bah, that spike came. And actually the moving average crossed again. So they crossed down, then they crossed up again. So that is actually total confusion. If ever someone is really trading based on moving averages alone. Moving averages, they have a certain role that they serve, which is not to show you direction. They don't show you direction. They follow behind. Like if you check, let's say we are in a downtrend, the moving averages, they'll start to downtrend after the market has already made a very, very huge move to the downside. So on this crash 500, there are two ways that you can go about it. For example, right now the market has already been crashing. Either you can, for example, this trend line here, it was broken there. So either you can wait for the price to retest this trend line, and give us a rejection, then it goes all the way to the downside. So you can either wait for this price just to come back there, then you can take your sales somewhere there at that zone there. So if ever price does not retest there, you just simply wait for this breakout of this trend line that is at the bottom. Once that one is broken, you can enter there either immediately or even after the retest that happens there. Because we have already seen that the market is in an overall downtrend, and we also showed you the most lowest point that the market can reach so far. That lowest trend line that we drew on the daily. That is also another lowest point that price can reach to before it starts to fully go up to the upside. So another thing that you can also look at is what do you call this? You can also look for areas or levels of support or resistance within your market like that. So let me see if ever there are any significant areas of support or resistance in our market there. So if you check on 1 hour, price was moving in that mini uptrend. Why am I calling this a mini uptrend? It's because the overall trend is to the upside. It is to the downside, I mean. The one that we saw on the daily and on the 4 hour, the overall trend is downtrending. So this one was simply a mini, it was a mini retracement to the upside. Why am I calling this a mini retracement? If ever you also know about this indicator, which we call the Fibonacci. The Fibonacci, what we do, we use it to identify the level of the level where the market is most probably going to retrace onto. Right? For example, when you're using the Fibonacci, for example, we're in a downtrend. In a downtrend, what you do, you simply take the
Someone is raising their hand.
Okay, what are you saying there?
Okay, sorry, what's that red line at the bottom?
This one.
Where are you pointing?
Here.
No, not that one. Horizontal one. I don't know. It's red or orange. It's red. The bottom one.
At the bottom.
Yes.
Are you referring to the one that is written 50%?
No.
Which one?
The top one.
This one.
Okay, that one.
This one.
No, the bottom one. The bottom one here, the below that one. Where the green thing, green bar
here
ends. Yes, but down the horizontal line.
I can't understand what you're saying.
Horizontal line.
8 or something. Sorry?
What's the price for? What's the price for the
line?
Oh, that's the price line. That's the price line. The current price.
Yes, that's the current price. I was now confused.
Okay. My apologies. I thought it was a marking on your chart.
Okay, so that one is the price.
Okay.
It's the price. So as I said, there are two scenarios to enter that trade. Either you wait for the price to retrace back to that trend line, or you wait for it to come and actually break that bottom trend line. Because overall, we are still in a downtrend, as you have seen on the highest time frames. Right. So another thing, you can also place levels of support or resistance like that. For example, this level, it was rejected. Price can actually come there and reject there to the upside, or once it breaks, it can actually retest to that level of resistance. What it can do, if ever it comes and breaks there, it can come back and retest there on that level as a level of resistance, then actually continue going down. You understand? So
Yes.
as it is going down, you also need to look at these levels. Like, for example, this level as well, that was a significant level of support. If price comes there and breaks there, that's where you can consider taking more sales or taking your profits. If ever it doesn't break there, if ever it doesn't break there, you can consider taking your profits there. Then you wait for price to break there, then you can consider taking more sales. Then those sales that you take, obviously, you now look at that next level, which is most probably our level there at the bottom there. So another area that you can look at is simply that trend line that we drew. Like if you check this trend line that we drew, one can actually look at that overall as the price can actually push all the way to that downside. But before it pushes all the way to that downside, beware of these areas where, because that is the, if you check this area, the line that I've placed there, that is the lowest that this price, that this instrument has gone so far. This is the lowest price for Crash 500, like in the entire history of Crash 500. So if ever price comes crashing and comes here, I want you to take note of this area here, because price there, it can even fail to break lower to go to that bottom trend line. It can even reverse there. It can give us a what we call a reversal pattern there, then shoot all the way to the upside. So take note of that area. Take note of that area so that you don't just leave profits running. You understand? So I think for Crash 500, everything is clear now. If you have any questions, you can ask. But I think we have exhausted everything concerning Crash 500.
I agree.
Right. So another thing, for example, the Fibonacci on the course, I think it's something that we're just going to talk about last, because it's actually a very, very important tool. The Fibonacci, we have the Fibonacci retracement and the Fibonacci extension, right? This one that I've placed on my chart is what we call the Fibonacci retracement. The purpose of a Fibonacci retracement is to show you how far the market can retrace. For example, I mentioned that when the market is moving, it moves in an impulsive way, then retrace, impulse, retrace, impulse, impulse, retrace, impulse, retrace, impulse, retrace, impulse, retrace, right? So what a Fibonacci retracement does is it can show you how deep a retracement can go. This retracement, it can show you how far the market can retrace to. Do you understand?
Yes.
Right. For example, this market was going down. That was a lower high. If you check on the highest time frame, that was a lower high. So from a lower high, what we expect is for the market to go and make a lower low to the bottom. So basically, we're simply expecting this market to go down. This market was in a downtrend already. So when you are in a downtrend, you will take your 100% level and you place it there at that lower high. Then the 0% level, you place it there at the bottom, which is your lower low, right? You touch your lower high to the lower low. You touch it from the left to the right when the market is downtrending. So according to the Fibonacci, price actually respected the 78.6. If you check price, it failed to break the 78.6 level. So there are three most important levels when it comes to the Fibonacci. The first level is the 23.6% level. This one, if ever you see price coming down like this, then it comes and retraces there. Let's say price came here and retraced there on the 23.6%. What it means is that market is moving in a very, very strong momentum to the downside. That's why it gave a small retracement to the 23.6. So either it's the 23.6 or the 38.2. Those ones, they actually show you that the momentum to the downside is very, very strong, of which here it failed. So if ever it fails on those ones, the next level that we need to look at is the 61.8 level. The 61.8 level, that is also a very golden level. We call it the golden zone. If ever price comes and retraces on the 61.8% level here, that is what we call the golden zone on the market, whereby if this price rejected there, definitely it was going to continue going down, but actually it failed. So when it fails that 61.8 golden zone, what we now look at is these two levels now, the 88% and the 78.6%, of which here it respected the 78.6. So me just using the Fibonacci, I could have actually entered this sell just using my Fibonacci without even drawing any lines, without even drawing any trend line. Just using the Fibonacci, I could have actually sold that market there at the 78.6 level. So after having sold there at the 78.6 level, your first target is always the 0% where you placed your 0%, which is your lower low here. This is your first target. This is the target that you are expecting the market to come. So our first target is the 0% level there. That is our first target to take our profits for that sell that we would have taken there at the 78.6. That is the first target at the 0% level there. So once price comes and breaks that 0% level and retests it, you can actually continue